Hello there. Welcome to a weekly segment of the Cytonn Report. I'm your host, Teresia Kingara. This week, we get to focus on the NSE and why they've been unable to achieve their listings target. This is contrary to what the CMA had projected, with the NSE only having achieved 2 listings in the last 5 years. With us on the show today is David Kitao, an investments analyst. David, karibu.
Thanks.
And maybe to start us off, you could tell us why we've had such a low listing on the NSE.
Okay, from the Capitals Market Master Plan, they were envisioning for 4 listings every year. But like you mentioned, we've only had 2 listings in the past 5 years, which shows that there's some problem behind it. In our research, we identified some few reasons why that might be the case. One of them being the stringent regulatory framework, as well as the disclosure requirements that comes with the listings. Because for a company to get listed, there's some things that they must be compliant with, which most companies find a bit too stringent, and also the costs that come with compliance. Also, some companies shy away from listings because some of the disclosure requirements essentially means that they will stop being private and they come to that public domain, which some of them feel that they get to lose their competitive advantage. Another reason was in terms of the vibrancy in the private equity market in our country. You come to realize that the private equity market has been very vibrant, and most companies in the country are small and medium enterprises, and some of them fear losing control or fear losing the grip of their companies. And the private equity market provides fills that void of the IPOs because they provide capital to the companies while they still retain their ownership, as well as things like the voting rights for the companies. Another thing that we identified was falsified market perception that we have in our country, that the capital market should should play second fiddle to the banking industry. We find that most companies in the country, usually when they need funding, they go to the banks to get loans, etc., instead of the capital markets like in other developed countries. Another reason that we identified is the shallow markets in the Nairobi Securities Exchange. By shallow markets, what we mean is that there are relatively few securities to trade in, and also there is relatively low liquidity. As we've seen mainly, the NSE is mainly dominated by intermittent trading of only a few stocks. That is these large market cap stocks such as Safaricom, KCB, Cooperative, etc. So there's also a problem there.
And maybe to give us an overview, as a company looking to list, what are the various segments that are available for anyone looking to list at the NSE?
Okay, currently we have 4 segments. The first one is the main investment market segment, which is mainly suitable for big companies that have been there for a longer time, because even from the requirements you find that some of the requirements are like the company has to have at least 100 million in assets. The second segment is the alternative investment market segment, which is mainly suitable for mid-sized companies. And like the first one that I said, it has less stringent rules because, for instance, in terms of assets, the company only has to have at least 20 million in terms of assets. Another segment that we have is the fixed income market segment, which mainly facilitates secondary trading of fixed income securities such as corporate bonds, government securities, such as government bonds, that is. The fourth segment that we have is the growth enterprise market segment, which provides a regulated platform for small and medium enterprises to raise capital in the NSE.
What are the various ways a company can list?
There are various ways that the company can get into the capitals market through the various segments, and the main ways that the companies can list is, the first one is through IPOs, what we call the initial public offers. When we talk about initial public offers, the companies basically issue their shares to the public so that the public can subscribe to their shares. And the difference between this and the others that I'll mention is that there is generation of new shares, as well as the company is able to raise capital. The second one that we have is listing through introduction. When we talk about listing through introduction, the shares are already there, but in a private setting. What happens exactly is the company now takes those shares and lists them on a public traded exchange such as the NSE. So the shares can now start trading in the public market. The third one that we have is listing through cross-listing, where a company is already listed in one stock exchange, such as the NSE, and then it gets listed on another stock exchange, such as the London Stock Exchange. And the final one that we have, although it's not that common, is listing through the back door, what we call reverse listing. What essentially happens is that a private company buys an already listed company and essentially gets listed through the what we call that backdoor listing, that is.
So David, going back to your focus, what are some of the recommendations that you're talking about at Cytonn that could maybe try and remedy the situation just to try and get more listings on the NSE?
Okay, we came up with a few recommendations that can be implemented in this capital market so as to boost the number of listings. And the first recommendation that we had is the government can be in the front run in stimulating the capitals market through the privatization of some of the state corporations through listings. We've seen this happen in other jurisdictions, such as Egypt, for instance. We saw the government coming up with a list of 23 companies at the start of the year. They were planning to privatize them through listing. Also, according to research done by the CMA, they realized that after privatization of state corporations through listings, they usually stimulate the capitals market. This was seen after the privatization of companies such as KCB and Housing Finance, because immediately after they were listed, it attracted new listings in the NSE. Another recommendation that we had, the NSE can embark on an awareness program to sensitize the companies with the potential to list, because what we've realized is most companies shy away from listing because they have this perception that raising funds through the capitals market is expensive as compared to raising funds maybe through the banks. But according to research by the CMA, it's relatively cheaper to get funds through the capitals market as opposed to getting through bank loans. Another recommendation that we had is that the NSE can engage with the private equity firms, because we said that the private equity market is very vibrant in the country. So they can engage with the private equity firms when they exit to the capitals markets. And finally, another recommendation that we had was there should be a review of some of the listing rules, regulation and disclosure requirements, because we found out that most companies are shying away from listing because of some of the requirements that are associated with listing. The Kenyan economy is dominated by mostly small companies, and they find complying with some of these rules and regulation to be costly.
What you're saying is that the regulators should make the process more appealing to get more companies listing on the NSE.
Yes, exactly. The regulators should make the process of listing more friendly to attract new listings, but also they should not compromise on some of the requirements so as to protect investors' interests.
Thank you, David, for making time to be with us. To get a more in-depth analysis of this report, visit the research section of our website, www.cytonn.com. Until next time, kwaheri.